I'm Trevor Williams with GlobalAtlanta. We're here with Paul Gleeson, who is the Consul General for the Republic of Ireland here in the Southeast. Paul, thank you so much for being with us.
Thank you. It's delighted to be here.
We're hearing a lot about Ireland in the news right now, and it's not all positive. I was wondering if you could explain a little bit about what's going on in Ireland's economy.
Yeah, we've had a tough time of it, I suppose, in the last few weeks. They're not the kind of headlines we would have picked for ourselves. But I guess the situation we find ourselves in, we had what some people have called a plain vanilla property boom and bust in Ireland. And that left us in a situation whereby we had a sizable fiscal deficit. And we had severe problems in our banking system as well. And the cost of cleaning that up has been significant. We've made significant adjustments already, adjustments of more than 14 billion in terms of revenue and expenditure, which is significant for an economy the size of Ireland's. And we had a budget last week introducing another €6 billion or $8 billion worth of adjustments. So that's been in terms of the fiscal deficit, and we're working strongly to eradicate and get rid of that deficit. And work it down, and by the end of next year we'll be 2/3 of the way along towards meeting the EU target in that respect of a deficit of no more than 3% of GDP. In terms of the banking crisis then, our banks have required significant additional capital because of the bad property loans or commercial loans and residential loans. In terms of recapitalising those banks, we have the agreement in recent weeks then for international support from our partners at the ECB and the IMF and the European Union. So that will allow us to return to a stable banking system, one that can lend to small businesses, and one that can help the Irish economy recover. And we've coupled that with a new system of financial regulation and a clean out of the personnel at the top of the Irish banks, and a new financial regulator and a new head of our central bank. So we're making those changes, but obviously it has been a turbulent period for Ireland.
Well, real estate problems in the banking system is something that the U.S. can definitely relate to with the financial crisis of 2008. But can you boil that down and simplify it a little bit more? What kind of was the root of that real estate boom and bust?
I guess there was a sense that property prices have been going up in Ireland. They've been going up since the mid-1990s. And there was a sense that much of that growth was merited. We had real gains and booms in the Irish economy, and that won't be lost either. Like, I mean, amidst all the talk of turbulence at the moment, some people talk like the Irish economy we're going back 20 years. Not at all. Like, I mean, what we're talking about, and the government have been very clear about this, is bringing expenditure and taxation back to levels that we had maybe in 2004, 2005, 2006, around that level. So we had a large time of gains that won't be lost to us, and that were very significant gains between the mid-90s and the early part of this last decade. What we had since then was the economy became a bit less competitive. We had a property market that didn't taper off, which would have been good for us in retrospect, would have been much better for us if it had tapered off early. But
was that due to speculation, or?
I think it was due. It's often hard. It's the same for, you mentioned the difficulties here. It's the same for property markets all over the world. It can be hard to get it to move in the kind of perhaps more stable, sustainable direction that governments and regulators and so on would like. And so we had that difficulty. So there is obviously property prices have fallen off to some degree since. And there's a sense that we now need to just find our level of consolidation and grow the economy again. But already we're seeing some changes in that respect. We will have very, very modest growth this year. Unemployment has fallen now for three months in a row. We're in a good position to return to serious growth of an average of 2.75% over the next 4 years. So we're in a pretty good situation in those terms. Our exports grew by 7% over the first 6 months of this year, which is something you'd never pick up on from reading the headlines, the cataclysmic headlines of recent weeks. So so we're not in that bad a position. We feel we're a long way towards moving out of this.
I think part of the issue is that Ireland, had for so long grown so quickly, and in such a way that it earned its nickname as the Celtic Tiger. And I think when that screeches to a halt, even for a moment, that gives people pause about the economy.
And as I said, because the Celtic Tiger economy attracted such good, positive international headlines, I guess it was meant we were more to the forefront of the news. in recent weeks, and certainly that was a part of it. But I guess also sometimes you feel that when all the cameras are going and when the microphones are there and there's all this coverage and commentary, that sometimes a bit of that perspective can actually get lost. And that, you know, in the plethora of headlines, you can lose a sense of, well, how strong is this economy? And our job is trying to remind people that, well, actually, it's still remarkably strong. It's still ranked 5th best place in the world to live under the UN Human Development Index. It's still in the top 10 countries in the world as a place to do business according to the World Bank. So it's just introducing that little bit of perspective that is something that we're keen to do in the current context.